Whoa, what's up everybody? How's it going? How's it hanging? Told myself I'd make one video a week every Wednesday, so that's exactly what I'm gonna do. Don't really feel like making one a day, but you know, I'm not a quitter, whiner, complainer. So we're just gonna get this one. Today we're gonna talk about, I've noticed that a lot of my videos are reaching very beginners in the space, which is great. I love teaching beginners because they're usually the most excited and they're the most curious. Today's like a pretty basic video. I'm going to show you how to do research on cryptocurrencies that you may be interested in, because there's a lot out there and it's really easy to get confused. So let's hop into my computer. I'll show you sort of like how I do research for cryptocurrencies, how I look at potential investments, and how I determine if something is trash or not. All right, so what you're going to want to do is go on over to this website right here, coinmarketcap.com, and you are going to be presented with the cryptocurrency market. Right up here, you have today's cryptocurrency prices by market cap. The global cryptocurrency market cap is $2.09 trillion. It's up 3.8% over the last day. You can see what's trending, the biggest gainers, and the recently added. So, and then below that, you have like a list of cryptocurrencies. So I'm going to basically explain the important parts of this page and skip over the stuff that you don't really need to worry about. So first of all, you have, when you look here, you see trending, biggest gainers, and recently added. Usually if something's trending, usually it's a meme coin or something. Gains like this, 97%, not super likely unless it's like a pump and dump. So if you're like super serious about crypto, I wouldn't even really pay attention to this. Biggest gainers is kind of the same thing. You get crazy percentages here. So a lot of these up here are just like pump and dump meme coins. Some of them could be real, but most of them are just people just trying to make a quick buck. Now, if you come under here, you have the list of cryptocurrencies, and then up here you have some categories, which I'm going to talk about in a moment, which are very important to your research. So under here you have this list of all these cryptocurrencies, and now you might be asking, Bon, what are all these coins? What do they do? What's the most important one? Like, what do I look at? This is super confusing. Well, I'm going to go through the important ones. So first of all, these are organized by market cap. If you don't know what market cap is basically the total valuation of the cryptocurrency project you're looking at. Market cap is determined by the number of coins in circulation times the price of the coin. So like if you were to look right here, you see circulating supply of Bitcoin is currently 18.9 million. Multiply that by 43,879 and you'll get a market cap of $803 billion. So of course you got the name, the price, the percentage it's gone up or down in 24 hours, the percentage it's changed in 7 days, the market cap right here, the volume traded in 24 hours, super important, and also the circulating supply, and a quick chart of the last 7 days. So right now, like we got Bitcoin, its price is 4,300, it's up 2%, up 0.46% over 7 days, market cap looks good, everything cool. When people are first getting into cryptocurrency, by the way, not a financial advisor, do your own research, but if I were you, I would pay, like, Bitcoin is like the main thing. Bitcoin is the granddaddy of them all. Without Bitcoin, there would be none of these coins, all right? None of these coins can even perform well if Bitcoin isn't, like, making moves. It's very rare that Bitcoin will be doing poor and then all these coins will, like, be doing well. Because when people don't have faith in Bitcoin, like, the main guy, then why should they believe in all this other stuff? So I look at Bitcoin. Bitcoin's doing cool. Bitcoin is always my main investment. Like, out of everything here, I think Bitcoin will be around for 100 years plus. So that's just like the foundation for me. Even though it is super volatile, it's like the rock of the cryptocurrency space. Underneath that, you have another coin you might have heard of called Ethereum. Ethereum is a coin that is very different than Bitcoin, and it actually kicked off a lot of the coins that we know and love today. The way I like to compare Bitcoin and Ethereum is Bitcoin is like a calculator and Ethereum is like a smartphone. The founder of Ethereum looked at Bitcoin and said, this is cool, the technology is great, but you can only do one thing with it, which is have transactions or hold it, you know? What if you could make applications on Bitcoin, you know, like the App Store? What if you could make the money programmable so that you could do stuff with it? That is what Ethereum is. So understanding these two coins will help you to understand pretty much like 70% of the cryptocurrency space if you understand these two. Let me explain. So you have Bitcoin here, which is like the boring coin, but it's the one that everybody loves, knows, and trusts. And then you have Ethereum, which is like Bitcoin, but it can do more things. Now, remember when I said that you could build apps on Ethereum? A lot of these coins are just Ethereum projects. They're Ethereum apps. In order to interact with the project, you need to buy some of these coins. So that's what a lot of these coins were created to do. But not all of them. Under Ethereum, you have one called Binance Coin, which is kind of the same thing as Ethereum. It is a platform where you can build decentralized apps, except it is a little more centralized than Ethereum. It's not true decentralization. As a result, Binance Chain is way faster and cheaper on fees, but it kind of misses the whole point of cryptocurrency, which is supposed to be decentralized. If you have a platform that's controlled by one company, me personally, I stay clear of it. But a lot of the meme coins over the past year have been run on Binance Smart Chain, like your Safe Moons and all those like gambling coins, meme coins and stuff, because it's way easier to trade on Binance than Ethereum, because Ethereum has incredibly high transaction fees that the average Joe just wouldn't want to pay. Like sometimes the transaction fees can be in the hundreds of dollars. This is because Ethereum and Bitcoin both have an authorization method called proof of work. So if you're not familiar with proof of work, it's basically what keeps the Bitcoin and the Ethereum network secure. You have your miners. They're all pouring in lots of resources and electricity in order to solve math problems, validate transactions, and earn either Bitcoin and Ethereum. Binance uses another authorization method called proof of authority, which is faster, cheaper, but it's just still so centralized, so me personally, I don't really mess with Binance. Underneath Binance, you have something called a stablecoin, Tether. Tether is a cryptocurrency that is backed by, well, they say it's backed by $1. So for every Tether, there is a dollar bill somewhere. So if you wanted to send your friend $50 of cryptocurrency and you didn't want it to fluctuate like crazy, send it to Tether. It's always going to be $1. It doesn't really fluctuate. You can see the chart here. It's like pretty flat. Occasionally, it'll go up to like 101 or go down to like 99 cents, but for the most part, it's $1. Under that, you have something called Solana and Cardano. So Solana and Cardano are basically the same thing as Ethereum and Binance, except unlike Ethereum, it's not using proof of work. It's also not using proof of authority. Solana is using a consensus method called proof of history, and Cardano is using a consensus method called proof of stake. All of these are faster and more energy efficient than proof of work. By the way, Ethereum will be transitioning to proof of stake soon on Ethereum 2.0. So you have all of these platforms that are basically like Bitcoin on steroids, where you can like build decentralized apps and stuff. Go down a little bit more. Polkadot is the same thing. It's a smart contract platform trying to do the same thing Ethereum's trying to do. Avalanche, the same thing, trying to do the same thing Ethereum's trying to do. So a lot of these coins are basically platforms that are in the running to be the decentralized smart platform of the future. It's kind of like Windows and Linux and Mac, each like going head to head, trying to become the operating system of your home. That is what a lot of these coins are doing. Each of these decentralized platforms has their own cryptocurrency, right? And that is what everyone is investing in. So Ethereum has Ether, which is now $3,300. Binance has BNB, $486. Solana has Sol, $151. Cardano has ADA. You get the picture. Polkadot has DOT. Avalanche has AVAX. So a lot of these people that are investing in these cryptocurrencies, these smart contract platforms, are just making bets saying that I think that this is going to be the smart contract platform that everybody's going to use in the future. In between those, you have other projects. USDC is another stable coin, just like Tether. People like USDC because it was created by Coinbase. As you can see, this one's a little bit unpegged right now. It's sitting at 99 cents. XRP is another coin that isn't a smart contract platform. It's like a company, honestly. I don't really mess with these centralized company coins like Binance and XRP. Just my opinion. And then you go a little bit lower, and then you start messing with these things called meme coins. Meme coins are just joke coins that usually aren't tied to anything. They have almost no utility. They just exist just to exist. You've probably heard of Dogecoin. Dogecoin have been trading under a penny for like the past 5 or 6 years. And then last year, thanks to Elon Musk, it was able to finally break over a penny, and a lot of people made a lot of money. Off of the success of Dogecoin came another meme called Shiba Inu coin, which was a lot cheaper. And if you had invested in this coin, when it had 9 zeros on it, and then it got to here, then you would have made a lot of money. And there's a lot of meme coins because they're really easy to make, but these are just the ones that are the most popular, and they become popular enough to be on the top 25 because their market cap is just so huge. 21 billion for Dogecoin, 17 billion for SHIB. That's a lot of money for a coin that's not backing anything. So that's why those meme coins are dangerous. I don't tell anybody to get into those. So let's review. You have Bitcoin, the foundation, and then you have your smart contract platforms like Ethereum, Solana, Cardano, Binance, and then you have your stable coins like Tether. You have your super centralized platforms like BNB, some more smart contracts like Polkadot and Avalanche, and then you have your meme coins. Under that, you have something called a layer 2 protocol, which is what Matic is. So the thing about Ethereum as a platform, even though a lot of people use it to do stuff, is that it's really, really slow and it's really, really expensive. Those transaction fees, like I said, can get really high, sometimes the hundreds of dollars, depending on the congestion of the network. When fees are really high and you can't do anything on Ethereum, it's just a bad experience for everyone. So this thing was created called Matic, which is basically a layer on top of the Ethereum blockchain. And it does a lot of the heavy lifting so that transactions can be sped up. This is called a layer 2 solution. And there's a couple of these. Then you go down a little bit more. You have a couple more cryptos, some cryptos tied to like companies like crypto.com. And then you have your wrapped cryptocurrencies, which are really interesting. This one is called wrapped Bitcoin. So let's say you want to trade or hold a piece of digital property that is pegged to the price of Bitcoin, but you want to do it on the Ethereum network because Bitcoin and Ethereum are on separate blockchains. They can't be on the same thing, right? So somebody made a coin or a token, an Ethereum token that is pegged to the price of Bitcoin. So if you want to invest in Bitcoin on the Ethereum network, you can do that with wrapped Bitcoin. Under that, you have Uniswap. So Uniswap is a coin for a decentralized exchange or a DAO. A DAO is a decentralized autonomous organization. Uniswap does most of the things a bank can do, except it's decentralized, no one's in charge, but there are people making decisions for the future of the protocol. The Uni token is what's called a governance token. So if you hold a lot of governance tokens for a project, you have a heavier say when it comes to voting in the direction of the project. So if I held a lot of Uniswap coin and the community was trying to make a decision on like whether we should add a feature or anything, if I'm holding the most Uniswap coin, then my vote would have the heaviest say. Usually developers of the project or people that are really interested in the project will pour a lot of research into getting as much governance tokens as they can so that they can have the heaviest weight in a vote. Going down, you have another thing. This is called a fork, Bitcoin Cash. A fork is basically when a blockchain changes its rules. So when you change the rules of a blockchain, it needs to split into another blockchain, right? And when you have another blockchain, you need to have a new cryptocurrency. So when the blockchain splits, new currency is automatically given to everybody who was holding the original currency. So if you had some Bitcoin, when Bitcoin Cash was created, you would have automatically had some Bitcoin Cash. So forked blockchains will usually occur when the community is trying to solve an issue. So for Bitcoin Cash, they were trying to fix the speed issue because Bitcoin, it's hard coded that it can only do 7 transactions per second, which is incredibly slow. So they said, okay, we're going to change the rules of the blockchain and make Bitcoin Cash so that we can have faster transactions. Unfortunately, Bitcoin Cash never really took off. As you can see, it's $383 and Bitcoin is chilling at $43,000. So yeah, sometimes these things just don't work. All right, so now that you have like the gist of it, you know that you have Bitcoin as the foundation. You have smart contracts like Ethereum. You have centralized coins that are kind of decentralized like Binance and XRP. And then you have your smart contract platforms that are competing with Ethereum, but in different ways like Solana, Cardano, Polkadot, Avalanche. And then you have your meme coins, which go up and down like crazy. They're like lottery tickets. They're not they really have no utility. If you get lucky on them, you get lucky, but nothing can really justify this price. Dogecoin and Shiba Inu. And then you have your layer 2 solutions like Polygon for the purpose of making blockchains like Ethereum even faster. And then you have your wrapped cryptocurrencies so that you can invest in coins and trade coins on a blockchain that it doesn't belong to. And then you have your governance tokens like Uniswap, which allow you to have say in decentralized autonomous organizations like Uniswap. You have your stable coins like Tether and USDC coin and DAI, didn't even mention that, but they're all pegged to the dollar. And you have your forked coins like Bitcoin Cash. When a blockchain wants to change its rules, update something, it needs to create an entirely new blockchain, thus entirely new cryptocurrency. Awesome. So if you were to go up here to this juicy point of information here, you can take a look at categories. So a lot of people ask me, hey, I'm really interested in investing in the DeFi space. Hey, I'm really interested in investing in the metaverse. Hey, what are some projects on these other decentralized blockchains that I can invest in? Well, if you come here to the categories, all of your answers are solved for you. Check it out. So I'm going to hit DeFi. All of these projects underneath DeFi are projects that are tied to decentralized finance projects. So you're going to have your Uniswap here. You're going to have your Pancake Swap. So from here, what I do is I basically like click on it, right? And it'll take you to like a whole bunch of information about it. You can find the smart contract, which is super important. It tells you like basically everything you need to know about the coin, all the transactions, the number of holders, the max total supply, the fully diluted market cap, the price, how many times it's been transferred, how often it's being transferred. The last transfer was 2 minutes ago. And the website. Once you hop onto the website, this is where the real juicy stuff comes in. On the website, if it's a good website, it'll probably have something like its documentation or its white paper, right? So that all your questions can be answered. Hopefully a respectable project has like their use cases mapped out so that like people can know exactly what they're putting their money into. Now, Chainlink is a very respected project, so I'm sure they have all their bases covered. There's a lot of cryptos out there with half-assed websites, which are obviously just trying to make a quick buck. So be super wary, because a lot of coins are just scams. Once you get to like the higher cap coins, it becomes a little less likely. But when you start messing with the smaller cap, I'm talking like under $1 million, you really gotta watch yourself. So yeah, wow, look at all of these decentralized finance projects I can invest into, right? So how about NFTs? They have their own NFT tab. So all of these coins are tied to NFTs in some way or another. You have Decentraland, which is a decentralized world in the metaverse. You utilizes NFTs in order to buy land, right? Flow, Tezos, Gala, Engine Coin, Sushi Swap, all of these have to do with NFTs. And of course, you can do your own research. Podcasts, YouTube, Twitter, just really deep dive into these projects. Don't just be throwing your money at anything. Metaverse coins are super popular right now, obviously, with Meta. When Mark Zuckerberg announced this thing, Decentraland went crazy. Decentraland's currently the most popular decentralized metaverse land, I'm pretty sure. But yeah, these are all the metaverse projects here. And then here you start going into your smart contract protocols. So like, you know how you can build apps on Ethereum. If you were to come here to Polkadot, these are all the projects and apps that are being created for the respective blockchain. So all of these projects are being built for the Polkadot blockchain. Same with BSC. All these projects are under Binance, Solana, all these projects, and Avalanche. So that's basically a quick run through of how I gauge market sentiment, how it's going, and basically when I want to get started researching, right? Just go to coinmarketcap.com, take a look at all the cryptos, and start organizing where you want to look. If you want to look at DeFi, go ahead and take a look at the DeFi space, Metaverse space. All this information is laid out pretty clean for you on coinmarketcap.com. And it's really up to you at that point to do the research, you know? And if something catches your eye, then maybe invest in it. Not financial advice, but maybe put some money in there, hold it for the long term, and see where the project goes. Now, I will say that because these are cryptocurrencies, they are extremely volatile. So only invest money that you're comfortable losing. This may be common sense, but the higher the market cap, the less return on investment you're probably going to get. So like if you were going to put $100 in the Bitcoin thinking you're going to double your money, the Bitcoin market cap would actually literally need to double to like what, $1.6 trillion for you to actually double that $100. However, if you were to go lower and start doing research on the smaller cap coins, even if you go like under $1 billion, 825 million, or go even further, then there doesn't need to be as much capital flowing into the project for you to make a good return. That's how you find your 5, 6, 7, 8, 9, 10x stuff. So yeah, start there. Obviously start with Bitcoin, do research on the smart contract platforms, learn about stablecoins, learn about DAOs like Uniswap, and maybe if you're up for it, maybe dabble in some meme coins. I personally wouldn't. But the big boys that will be around forever are definitely Bitcoin, definitely Metaverse coins, and definitely take a look at some of these smart contract platforms that are competing to beat Ethereum. Anyway, guys, that's the end of the video. I'm going to go eat something because I'm starving. If you enjoyed the video, don't forget to subscribe, follow me on Twitter. And if you haven't invested in cryptocurrency yet, you can use the link in the description to get $10 of free Bitcoin when you buy $100 of any cryptocurrency. Also, if you like my teaching style and you want to connect with me, there's 2 opportunities to do so in the description. I am teaching a weekly class, a weekly Web3 beginners crash course, which is like a Zoom group. You can join in and sign up. Links in the description. I do that every Sunday. Or if you have a company or you're working on a project and you need a one-on-one consultation with me, that link is in the description as well. Anyway, thank you guys so much for watching this week's video. I'll catch you in the next one. Peace out.